Thanks very much indeed for finding time and coming through to chat to us about this.
Thank you, Godfrey.
I just wanted to make the comment that when you look at the long history of Murray and Roberts, and you look at the offer that has come through from Aton, I mean, you obviously do your business well, and in the process you attract people. I was worried that we will likely lose Murray and Roberts as a South African company as we have known it since 1902. I've been reading up on your history. Thank you.
Yes, Godfrey, I think the first point to make is that Murray & Roberts has been transformed over the past couple of years from being predominantly a South African civil contractor and building company to a multinational engineering and construction group. So most of the work that we are currently doing is already in the international space.
Sure. Based in Johannesburg, though.
Well, we are still based in Johannesburg, listed on the JSE.
Yeah, primary listing.
But our business has shifted. And we are focusing on market sectors which present us with growth opportunity.
Sure.
And for that reason, the balance has shifted and we're now predominantly international.
So give us an update before we talk about the operational issues of that takeover offer by Aton. I saw in your commentary that you said 17 Rand a share, according to the independent committee, isn't a fair reflection of the value of the business, but you think shareholders in any way will peck in. Why?
Yes, the independent board maintains a view that the value for control is between 20 and 22 rands a share. However, the offer is at 17 rands a share. My view on that is because the share has been trading below 17 rands for quite some time, that there may be some shareholders that would see this as an interesting and attractive offer, and they might accept it. And should that happen, there may be other shareholders that may be concerned that this increase in investment by Aton may impact the free float that we have in the market. And if the free float gets too low, then what are the chances of the share actually trading to the 20 to 22
Just explain
rands?
that, because I think the reference that I saw is that Aton currently controls about 44%, and then you've got the PIC sitting at about what, 22, or is it 32?
Just over 20%.
Just over 20%.
And then there's another 10% which are held by the trusts within the group and by the share incentives.
So you combine all those and you're sucking up all the tradable shares that potentially could be moving the
That's
stock
the
on the shares.
concern. And should that scenario play out, I think that some shareholders may opt.
What are we waiting for at the moment?
There's a number of suspensive conditions, which are essentially the regulatory approvals. And what has happened since we last discussed our year-end results, Aton has achieved conditional approval from the competition authorities in Zambia, unconditional approval from Namibia, but the two important jurisdictions are Canada and South Africa. And the relevant authorities are still considering the merger application that was submitted by Aton.
Yeah. So as you were coming in as well, I was looking at the performance of Murray & Roberts shares versus the top 40, for instance, and the graph goes something like this. So you can sort of understand the motivation for that shareholder who thinks, okay, so maybe 17 Rand a share isn't the 20 to 22 that the independent committee is suggesting, but at least I might be able to pick something. What did you say to those shareholders? Is it too late now to change their minds?
No, the shareholders still have 10 business days after Aton announced that the transaction has become unconditional. So what they have to do before the long stop date, which is the end of March, the 31st of March, they may elect to extend the long stop date. But what they would do is, should they get all the approvals, they will announce that the transaction has become unconditional. That has to be announced on SENS. If they do that, there's still 10 business days post that announcement for our shareholders to decide whether they want to accept the offer or not. So there's no need for them at this stage to decide, because the transaction is not unconditional. But as soon as it does become unconditional, and if it does, then it would still be 10 business days.
We're forgetting, of course, we're talking about the results for the first 6 months of your financial year. Just pick for me the main highlights out of it.
I think the really exciting bit of the result is that the mining business has really done very, very well. It has exceeded our expectation. It's a business that is recording very strong growth, and we do expect that it will continue to do so for a number of years to come. I think where we were a little bit surprised is that the contribution from the oil and gas platform and from power and water was below our expectation for good reason. But all in all, we basically maintained headline earnings for continuing operations on a par with last year.
So it sounds like the move into trying to streamline the group and exiting construction has paid off very well.
We think so. You know, when you look at our previous peer group, the remaining companies in the construction sector, here in South Africa, they are really all struggling and under severe
100%.
pressure.
Well, to talk about Avenge, penny stock now, right?
Yes, yes. So we have made the change, and we think in the longer term, we will see the benefit of those decisions.
Let's talk about that longer term, because I was looking at your order book. You're talking about an increase to 31.7 billion rand, and that compares with the first half of 2018, 22.1 billion rand. So that seems like a big jump. And then you're also looking at, for the financial year to 2018, 30.1 billion rand.
Yes, the order book.
Where is the work coming from?
The order book is essentially in the mining space.
Yeah. Mining.
Mining. Our mining business is a global business, and the growth in the order book is not only in one specific jurisdiction, it is across the globe. Everywhere where we have mining operations, we're experiencing growth in our order book and demand for our services. Having said that, in the second half of the current financial year, the period now up to June, we've got near orders, substantial near orders of about 22 billion as well.
Sure.
Now, near orders are orders where the clients have indicated to us that we've got the work, but it is still subject to certain commercial conditions that need to be closed out. In the oil and gas business specifically, we do expect an award of about 14 billion rands before the end of June.
So now with that glut of work as it appears, so you see me peering here because I'm trying to look at your margin, and what I'm looking at is 2017 is showing me 37% as a contraction, I think, and then 2018, 4%, 2017, I'm not too sure what I'm measuring here, but the margin as I'm seeing for 2018 was 5% from 9% the previous year.
Is that
deterioration, is that likely to bump up?
Is that in the oil and gas platform?
I think, sorry, this is oil and gas, yes.
It's got everything to do with where we find ourselves in the cycle. As you know, the oil prices has been soft for a number of years, and there hasn't been significant investment in that market. And we still expect another 2 years of low investment before we think that opportunity will return. So currently we are really excited about Mozambique. We hope that the investment decisions will be taken before the end of June. That is presenting great opportunity in the oil and gas space. And there is significant opportunity for us in Papua New Guinea. But whilst these projects are still a bit out, we are making good inroads in complementary markets. And this 14 billion rand order that I've just referred to is in a complementary market in Australia.
Right. 2 quick questions before we let you go. For that overall margin, where do we stand? Because I'm thinking, as I was saying, because you're seeing more work, surely you should be able to pick and choose.
What we always say in our business, every dollar that comes through the income statement, that is secured on a competitive basis. So for us, our margin aspiration is between 5 and 7%. So when you find yourself in a difficult market, in the down cycle, we would be very pleased with a 5% margin. But in the up cycle, you should expect to get 7% in that order.
I remember in 2010 when you guys were well above 10%.
Well, I think it's all a function of the demand for our services at the time. The market was undersupplied. There was a lot of work happening, and in that condition, you are able to be a bit more selective in the opportunities that you pursue, and you are able to attract a better margin. It's a supply and demand balance.
Absolutely. Very quickly, this excitement that you're seeing, are you also seeing within the South African mining space? Because we speak about South Africa and how the uncertain policy environment has impacted investment into the sector.
Yes, there are opportunities in South Africa, but less so compared to what we see elsewhere.